where can I get information about the stock market and investments, and so I can educate myself and understand where I should put my money.
First, let me say you're taking the right approach. Rather than just throwing money into the stock market, you should first get a sense of how the financial markets and different types of investments actually work. An excellent place to begin that education process is at the Money 101 section of our website, where you'll find easy-to-read interactive lessons on virtually all aspects of investing. I recommend that you start with the lesson on investing basics, which will give you a good overview of the fundamentals that drive both the stock and bond markets. Once you've mastered that introduction, which you can gauge by seeing how you do on our 15-question quiz, you can move on to lessons that focus on specific investments, such as stocks, bonds, and mutual funds. And while you're there, don't overlook the lesson on asset allocation, because that's where you find out how to build a diversified portfolio of investments that makes sense for you given your goals and tolerance for risk. Now, once you're familiar with how the investment world works, you can start thinking about where to put your money. Initially, at least, I think you're probably better off sticking to mutual funds, since they give you access to a diversified pool of investments that's overseen by a professional money manager. What's more, you can usually get into them with just a few hundred to a few $1,000s, and without too much effort, you can find funds that are easy on the wallet, and that they have low or no sales charges and carry low annual investment fees. To find funds that may be a good fit for you, you can check out our Money 70 list of recommended funds, or to explore even more options, rev up Morningstar's Fund Screener. Frankly, I think even for experienced investors, funds are probably the best way to go, at least for the core of their investment portfolio. But if you're feeling confident about your investing abilities and want to tiptoe into stocks, fine. Just remember that individual stocks can be a lot more volatile than mutual funds, and that one of the surest ways to lose money in the stock market is to engage in rapid trading. So if you do move into stocks, think in terms of investing in good companies with solid long-term prospects rather than buying into the latest fad. You can follow the fortunes of individual firms by regularly going to the U.S. stocks section of our website. The key, though, is to make sure you understand how the markets and investments work before you start committing your money. Do it the other way around and you'll get an education all right, but it may be a very expensive one.